So hi everyone, it's Wisdom Jordan right back here, and this is lesson 14 of Forex trading. So in this lesson, we are going to be looking at support and resistance. This is the best guide to support and resistance. So we are going to be starting off with support. Okay. So support is a price level or a price zone on a chart below the current market price that a previous trading price failed to break through. For example, when look here, the price moved here, creating a higher high, moves low, creating a higher low, goes up, higher high, goes down, higher low, goes up, higher high, goes down, higher low. If it continues like that, so these levels where the price failed to break through are what we call the support levels. Okay, so for example, when you look at the chart here, so the price moves down, turns up, goes down, turns up, goes down, maybe tries to turn up. So these levels where the price failed to break are what we call the support levels. Okay, so when you join this first turning point with this second point, you form what we call a support line. Okay, so when you look at the chart here to understand support and resistance more, the price went high, retraced, was high, retraces, was high, retraces, and then it was high. So the lower price levels which fail to break are called the support levels. Okay, the support level. Okay. So we are going to be looking at resistance. Then resistance is a price level or a price zone on a chart above the current market price that a previous trading price failed to break through. Okay, so here the price goes high, goes low, goes high, goes low, then goes high. So when the price moves and hits a level and then it turns backward, that is what we call a resistance level. Okay, these levels here are what we call the resistance. So for example, here price goes high, hits at a certain level, it comes back. This level where it has failed to break through is what we call a resistance level. Okay, so how do we plot support and resistance zones or support and resistance levels? Okay, however, all types of charts and timeframes can be used to plot support and resistance. The best way to plot support and resistance is to use what we call a line chart and higher time frames depending on your trading criteria. Okay, when plotting a support level or drawing a support zone, find previous swing lows where the market price reversed and join them together. When plotting resistance level, draw a resistance zone. When plotting a resistance level or drawing a resistance zone, find previous swing highs where the market reversed and join them together. Okay, let's look at this practically. So when look at this chart here, this is what we call a line chart, and this is for that is gold, dollar at H1 time frame, that's the hourly time frame. So here the price tries to go high and it fails, it goes down. Price to go high, fails, it goes down. Then it creates a new trend. Okay, so we are saying that the turning points above the current market price are what we call the resistance, and then turning points below the current market price are called the support zones. So when you look here where the price turns and then it moves downwards, that is what we call a resistance. Here price hits this level, then it goes downwards, that is what we call a resistance. Price hits a level and then it goes high, we call that a support level. It's a higher level, goes downward, we call that a resistance. Hits a given level and then it goes high is what we call a support. Okay, so here the reason that's why we use line charts is because line charts will not show us the very low price levels that the moving tried to hit. Okay, so for example, when you look here, these are closing prices. Okay, it gives the clear closing prices where you see, and then they get joined together. So this is a support level, okay? This is a support level, okay? This is a resistance because price hits this level and then it goes downwards. This is a resistance level because price hits that level and then it goes downwards. When the price hits this level and then it goes higher, it is what we call that's what we call a support level. Okay, so the support zone, it could be, for example, like here, it could be a zone, and we do not care about this price that protrudes through because we consider it as a zone. So things to note about support and resistance. One thing to remember is that support and resistance levels are not exact numbers. Oftentimes, you will see a support or resistance level that appears broken, but soon after find out that the market was just testing it. So with candlestick charts, these tests of support and resistance are usually represented by the shadows or wicks. So for example, when you look at the chart here, the price goes down, goes high, goes down, goes high, goes down, like that, like that. Okay, so we said when the price hits a higher level and it goes downwards, the higher level becomes a resistance. Higher level, price goes downwards, it becomes a resistance. It's a higher level, price goes down, it becomes a resistance. So here, price hits a lower level, it goes high as a support. Lower level, price goes high as a support. Lower level, and then the price goes high. That is what we call a support level. Okay, so we can use a support level or a support zone. It's the best example of a support zone. So when look here, the price hits this level, and then it also hits this level, and then it hits this level, then this level, then this level, and then this level. So what does that have to mean? It means that you have to connect this point to this point, and then to this point, and then to this point, and then to that point to create what we call a support. Okay, here as the first line, in there, and there, and then here. Okay, so we have to join this here, these levels. Then you join that level with that level, then that one becomes a support level. So here is a resistance level, a resistance level, and this is a resistance level. So that one, we join these lines and then it become a resistance level. So we are saying that these are not exact numbers because at a certain time, these levels would be just tested. For example, when you look at this candle here, it moves to up to this level, but it did not close in that level. So the price just tested that level and then it went back again. That's why we say they are not exact numbers. Okay, and then when you look here, this shadow tested the level, but it did not close in that level. Okay, even the same thing here, shadows tested, but they did not close in that level, and those ones become support zones. So they are not exact numbers. Okay. So when plotting support and resistance, you don't want reflexes of the market. You want to plot its intentional moves. So when you look here, it's a resistance zone, okay? The resistance zone. But every time the price hits this level here, then here, here, and then here, the price retraces back. That could be the exact resistance levels. But I want you to note that at this level here, the price protruded through that resistance level. So we want to get rid of this, okay? So we do not care about this. That's what we are saying, that we do not want the reflexes of the market. So this is what we call a market reflex. It breaks through the given level, this level here. So the market breaks through the level and then it creates some new price changes up and then it comes back again. So this is what we call the market reflex. Okay. So this is a market reflex. It's a market reflex. And then this is also a market reflex. So we ignore those levels and then we connect the levels which are more suitable. Okay. So when you look here, this was a clear support level here. It was a clear support, then support. Okay. It means that you have to join this point, and then you join it to this point, and then you join it to that point using a good line. See, it's a line. And then here is a line, connect to this level. Okay. Then down here becomes the market reflex. There's a market reflex, and we do not consider that reflex. Okay. So when the price breaks through the resistance, that resistance could potentially become a support level, and when the price hits a support zone, that support zone could become a resistance level. Okay. So for example, when you look here, we are saying when price breaks through a support, it can become resistance, and when the price breaks through a resistance, it can become a support. So here it was very clear that the price went up, hit a resistance zone, and then the price finally goes down. Okay, so this is now resistance 1. Okay, here price creates what we call resistance 2. Price goes high, and then the price goes down. Okay, so this is resistance 2. So we are expecting price to come and hit this level, and then it comes back down. But oops, it didn't happen. Okay, that did not happen, and then the price broke through. So when the price broke through, it creates a new resistance level. So this resistance can potentially become a support, just like here. Okay, so this was a resistance, and then a resistance, and now it has become a support level, then support level. Okay, so this is resistance, this is resistance. So if price break through, it can come and hit it, and then becomes a support, and then it continues. Okay, so we are saying if this is a resistance level, the price breaks it, it can come and test it to become a support, and then it continues. Hit it again to become support, and then it continues. Okay, or if this is a support level, price will go down, come back and hit it, becomes resistance, and then the price decreases again. Okay, so the more often price tests a level of resistance or support without breaking it, the stronger the area of resistance or support. So for example, here the price tested this level, it went back down. This level goes back down. This level goes back down. This level goes back down. So because the price is hit this level several times, this one becomes a strong level of resistance. And then a support level is only confirmed when it has hit that level 3 times and more. Okay, here support 2 times hit, that time this one is now a valid support level. Okay, here hits it again, goes back, and then here becomes a very strong support level. When a support or resistance level breaks, the strength of the fall through move depends on how strongly the broken support or resistance had been holding. Okay, so for example, this level here holds 1 time, 2nd time, then the 3rd time. This becomes a strong support level, and when price came and broke through it, it created a massive drawdown. Okay, so for example, this level here, it is also holding right here. So if price moves here below, it breaks that level, it means that the next move will be a very strong one because it has broken a very strong level of support. Okay, so the higher the time frame, for example, yearly, monthly, weekly, daily, 4 hour or 1 hour respectively, at which support or resistance level zone are formed is then the stronger it is. So support and resistance on yearly charts are stronger than support and resistance level on a monthly chart, stronger than those on daily chart, stronger than those on hourly chart, and then stronger than those on minute chart. Okay, so if we form a support level at yearly chart, it is far stronger than that on daily chart. Okay, you have to note that. So when you look at a chart below, can we be able to spot some levels of support and resistance? Okay, let's start and see here. So right here, price goes high and then it goes low. It hits this level, it becomes support. Okay, price goes high, hits this level, and then it turns. This level becomes a resistance, and then this was our previous support. Okay, then the price hits it again and it becomes again a support level. Is it a valid support? No. Why? That the level has not been tested 3 times. Okay, so your price goes high, hits this level, then it comes back down as this one becomes a resistance. Okay, and we are saying that if a level of support is hit 1 time, 2 times, 3 times, this one becomes a valid resistance. If the support level is hit 1 time, 2 times, 3 times, this one becomes a valid support level. Okay, so here we have a support level, we have support level, here we have a support level. So that is a valid support level. Why? Because when you connect to this point, connect it to this one, and then this one, we ignore the market reflexes here like this. We ignore the market reflexes. This is a market reflex. It's a market reflex. If we ignore those market reflexes, this becomes a valid support level. Okay, so here is the resistance level. Why? Price hits, goes down, price hits, goes down as a resistance level. So here it is a valid support level. Okay, price hits the level, goes high, hits the level, goes high, hits the level the 3rd time, it becomes a very valid support level, a strong support level. Then the price creates a move higher. Okay, so here we create a new resistance, and then the price goes down, hits our support level again, and then goes high. So we said so for example here, we want to connect this level here, this level here, this level here, and then it was also retested right here. Okay, so when you join that level, it is a clear support level. When you join that level, it is a clear support level. Okay, so this level is a clear support level. Why? That level has been hit 1 time, 2 times, 3 times, then the 4th time. Okay, extend it a bit. So when the price came and then broke through the level, it went further down because this was the price had broken a clear strong support level. Okay, so we shall be studying more of support and resistance levels in the in our strategies. Okay, how to use support and resistance level as buying points. So why are we studying this? Because we know that every time price hits a support level, it goes back high. Hits a support level, it goes back high. Hits a support level, we buy. Okay, so price hits a support level, we buy. Price hits a resistance zone, we sell. Okay, one more thing. So when you look at this level here, when you look at this level here, okay, we want to create something small there. So this was a clear support level. Okay, support, and then it's a valid support. So when the price came and broke through it, it came and retested this level. It then became a resistance. Then hits it again, it becomes a that is a new resistance level. Okay, so we say that when the price breaks a support level, it can become a potential resistance, and that is what has happened. This is a support, support, support. Here we expect price to hit this level and turn, but it didn't. The price went down, and when it came back to this level, it became a resistance level, and then it went down, hits that level again, resistance, and then it goes back down. So that is what we mean. Okay, so when you look at this level and then this level, they can be connected to these ones. How? Okay, let's tweak. Line saying this level here. Okay, so this is a support, this is a support, this is a support, and that was also a support. So instead of considering this as a support level, we could potentially consider it as a support zone. Okay, so we could use this level as a support zone, this one. Okay, this becomes a support zone. We ignore these reflexes because it's a market reflex, and then the level is tested, and then the level is tested again. So when the price came, tested the level of support and became resistance, tested the level again and becomes level of resistance. Okay, that is that's a brief introduction to support and resistance. We shall be looking at support and resistance levels more in strategies. Okay, thank you for watching this video. My name is Jordan, and I will see you in the next one. Okay, do not forget to subscribe to this channel. So in the next lesson, we are going to be looking at trend lines. May the markets be with you. See you.